So I'd love to chat and bring it back. Those are kind of your short to medium term trades, but I'd like to think back to this environment and the way of explaining how the market works and how economies work, and try to figure out if there's a way that societies will ever be able to break out of it. Because to some degree, you've painted a picture here that shows a tendency for disinflation. And I guess at the crux of the matter is that you're looking at the high level of private sector indebtedness, and you're saying that the reality is it's going to be difficult with that private sector high level of indebtedness for us to get inflationary credit growth. Is there any way you could see a situation where you start changing your kind of, let's just say, home-based stance, where you say, now we're in an environment where we're actually going to get that private sector credit creation, and that I should be leaning more towards that kind of growth and / inflation quadrant? That should be more like what I should be counting for as the let's just say the neutral spot.
Yeah, so before I answer that question, I'd like to stress out I do not like maximalists of any sorts. I do not like permanent dollar bears, permanent dollar bulls, Bitcoin standard people. Well, it's not that I don't like them, but having the confidence to assume that you always have a probabilistic scenario of the world. By definition, as you're not God, you don't know how it's going to turn out to be. So you can make some assumptions and you can have some future scenarios. I think it's pretty arrogant to have one scenario and attach 100% probability to that scenario to realize. All right. So, of course, I was also the first one 9 months ago to point out that I thought US core inflation could overshoot 3% for several quarters temporarily, because, of course, there was a large amount of credit impulse being thrown to the economy. Therefore, short-term inflationary forces would pick up. So I would be the first one, Kevin, to change my mind if structural facts actually change.
Okay.
So that was your question.
Yeah.
What change?
What would be those structural facts? Like, is a disinflationary trend just inevitable, or is there something like we could do as a society and as to change that? And should we change that?
Very good question. So, what would make me change my mind? So, you either would have the structural forces of the economy turning for the better. So, this would be either increased birth rates or anyway material demographics changes for the better.
Okay.
Or that would be better allocation of capital throughout the economy, and therefore, in general, better productivity. So let's talk about this capital allocation, because QE drives capital misallocation. And it does that because it keeps real interest rates very low, and therefore allows a bunch of companies to repay or to keep afloat on their debt servicing costs, despite these companies not being very productive anyway. And by doing that, it incentivizes, capital to chase high yielding risk assets, despite maybe those issuers and companies are not really productive and not worthy of attracting capital. Right. So with this asset valuation and this wealth illusion where we live in, there are effectively two ways that I think we can try to handle that, or, what the political agenda would force us to handle. The first one is what we're trying now, and it's financial repression. So what you do is you force real interest rates below real GDP growth for the government, or in general, real cash flow capacity generation from the private sector, such that in real terms, over a very long amount of time, you will have asset owners being penalized. So their purchasing power shrinks as they are forced to buy these bonds, which yield below inflation levels. And you have the borrowers that actually get the benefit of having their debt being inflated away. And as they need to pay effectively very low real interest rates below their capacity to produce real cash flows or real GDP if you're the government. So this is basically an environment of financial repression.
Okay.
This obviously generates other problems because as you try to do this for 20 or 30 years, and you really need a lot of time to repress the system into lower amounts of debts in real terms, you will face higher asset valuations, higher inequality, and social unrest of any form at some point, right? And political shifts, which are very difficult to digest. But this is the way that we will go for. So we just started this and it will continue for decades, in my opinion. This is my base case scenario to which I attach a decent probability. It's not 100%. I don't have a crystal ball. But if I would have to assume, this is the way we're going because it is the most politically acceptable or sellable way. It doesn't mean it's the best one, but it means that politicians can keep on doing that and hope they will be re-elected in the next electoral cycle. And it is a slow, stealth drain of purchasing power from the private sector that compounds over time, but for the next year or two, it might still be okay. And for a politician, as long as it is okay for the next electoral cycle, it's a decent incentive scheme for him to go this way. Because what would be the alternative would be upfront wealth destruction. So that would simply mean that we would mean revert asset valuations to levels that are more consistent with our structural capacity to produce earnings and cash flows to service debt in general, debt levels, but also to make sense of this assets valuation. But to do that, you need wealth destruction all over the place.
Right, like that's like an Austrian style, like debt reset.
Yeah, so basically a massive
which is
leveraging
never going to
process.
happen. And so you think that this is the long and short of it is that we're going to have this slow, steady kind of financial repression, and because this financial repression will really never escape escape velocity or never achieve escape velocity, it's going to just be this pull and push, and that yes, asset prices might rise, but we will not be achieving the optimal level of economic output because it's not being allocated correct. Is that fair to say?
Yes, I would say so. I mean, the painful reforms that you'll have to go through to make your system more productive and also to, increase long-term prospects for potential growth are very difficult to sell. Is it not much easier, Kevin, to just borrow and extend credit and then go through the next electoral cycle as a winner and then leave the problem to somebody else? But then he would then do again the same when the next financial crisis hits. So it's simply kicking the can down the road. But at some point, you also need financial repression on top because private debt levels have reached points into which you need real interest rates to be extremely low for the private sector to be able to digest these debt levels. So you will need to go with financial repressions. I don't think there is any other viable solution.